Good afternoon, everybody. This is Dennis Wilborn. Welcome to the Making Money Trading Stocks, Options, and ETFs webinar hosted by Active Trend Trading. I'm Dennis Wilborn. I'm your host today, also the founder of Active Trend Trading. I don't know if anybody's going to join us from outside of that, if Michael's going to join us from Zurich, but he's probably enjoying his last few days of the summer or early fall time over there. So let's get going. The market's doing a lot of interesting things. September is kind of a month where we can kind of just look towards October getting here. To put it in a basic way, September tends to be the weakest month of the year regarding the market, but what it does is it provides us, setups to go into the end of the year. I know I received a couple of articles talking about that, and something that we've been talking about at Active Trend Trader for quite some time. I want to remind everybody that all the materials presented are for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. Past performance is not an indication or a promise of future performance. A little bit about, I really take this model seriously. This is a model for the whole company. Clarify, simplify, and multiply. I want to basically continue to work on the essence of helping traders clarify their systems, simplify their systems so that they can multiply their returns. That basically is the bottom line behind everything I do, everything that I seek to do in Active Trend Trading. We also, I'm very proud to announce that my son Brandon, who's 38 years old, been working with me on and off for numerous years in the market, really great market technician. He is going to be joining me for more of our sessions, and he's also taking on the responsibilities of monitoring what's going to be called the market action points, which basically is a enhanced revision and improvement to the early warning alerts. It basically gets rid of a lot of the limitations that we had with early warning alerts, but we'll talk about that shortly. So remember, always buy wholesale and sell retail. Works for stocks and options too. We're always interested in, why do so many of us belong to Costco? Because Costco gives you the ability to buy things at wholesale prices. Now, some people actually turn around in retail and sell what they buy at Costco for retail. What oftentimes happens with traders, we get in kind of a reverse type of process where we tend to buy at retail and then sell for a loss at wholesale with the entities and the stocks and the options and the ETFs that we are interested in. We want to stop that, that from happening. So how to make money trading stocks, options, and ETFs. My objective is to provide timely, actionable intel review at the end of each week. Just a real quick market review, and we'll get into that here shortly. We're kind of having a mixed week, that means weak, not strong. September waiting, and I'm waiting for the end of year move, which tends to take place in the October, November timeframe. And we've had a lot of, as we've seen, the market is just really wishy-washy, gets impacted with news and all that type of thing. And so it's a real pain to sometimes trade what's going on in the markets with because of the whipsaw that's happening. We'll take a look at some stocks, ETFs, performance, bonus trades, if we do have any. I've got a couple of ideas going into next week. Here's where we're sitting as of today at 9 o'clock this morning. We're up about 23%. My target for the year, of course, is 40%. Very pleased with one of the things that Brandon was doing for me is going back and just re-reviewing how well Active Trend Trading has done over the past 6 or 7 years since we've been offering the service. And we've averaged about 30% per year, which is, I think is good. And we do it across 3 different strategies. Those strategies are going to stay partly the same, but we're going to be doing some just modifications going into 2019 that I think you're going to really appreciate. Those of you who are premium members will appreciate the continuous clarification, simplification, and earning potential going into the end of the year. So let's take a real quick look at the charts. Let me find them. And we'll take a look at the daily, the weekly on the SPY. Well, let's first, before we get to that, let's take a look at the we'll take a look at the diamonds. We don't do that very often. As we can see, diamonds. Diamonds daily chart on the right, anchor chart weekly on the left, and as you can see, the diamonds have now broken out above. Where's my? They have broken out above this old past high. So basically we have a breakout. Now the technical way of measuring that, just for everybody's, so that you can know how to do it, is basically you take these lows back here and you measure up to the old past highs. And whatever that distance turns out to be, so look at about 233 up to about let's call it 265-ish. 265, so that's, what is that, a little bit over, around 32, 33 points. That would be the anticipated move on up to the new highs with the diamonds. What about timing? Well, one thing you can do is just take the timing, and this is just a standard technical approach. You can take the timing that it took to go from the, reach back up and find the old highs again. Or some people actually cut that in half. They said, okay, half of my cup is about here. So I anticipated the time it would take would be from there on out. And as you can see, that would be about 6 to 8 weeks to reach the new highs. Now, is that a guarantee that we're going to reach the new highs? Of course not, but it gives you a projection of a timing aspect of, hey, that's going to happen out over here somewhere. And because basically, remember, markets do not go up in a straight line, and there will be pullbacks, there will be back and fills as it processes and proceeds on up. But it'd be a great idea to keep an eye on the die. When I look at a daily chart, though, okay, that's all positive on the weekly. When I look at the daily chart, this move right here from, where's my, hold on, from here to here, seems a little bit steep, especially for a multi-day run. Got a little bit of pause in the middle, then we proceeded up. Seems a little bit steep compared to some of these other runs. But as we can see at this point, so I would anticipate possibly next week, going into maybe the first week to 2 weeks of October, we'd see some kind of a little pullback. And that's a positive. Pullback into the first part of October would be a potential setup going into October for the year-end run. Spider, S&P. It's up about 24 cents today. What's very interesting, I'll call this to everybody's attention. It's up 24 cents. However, it's down from yesterday's close. What's been taking place in the spiders today is just a rebalancing. That's all it is. It's just a rebalancing to basically a rebalancing. So it's just some things changed out of the S&P. So by and large, when they rebalanced, it's still into the new entities that it represents. It actually went up a little bit. So spiders, what do we got going on in spiders? Clearly we have we have a negative divergence going on a weekly chart. We have a negative divergence as it pushes on to new highs going on a daily chart. Doesn't mean we can't continue to push on up to make new highs. However, when I talk about waning momentum, in other words, dropping momentum, this is what I'm talking about, where new highs here, not supported by new highs in momentum, which means at some point we will run out of gas, and then we'll take a larger dip back into support. Spiders, as with the Qs or the NASDAQ composite and the Russell, just watch for the pullbacks. And as we see, we have a little bit of a mixed market today as I show up Qs. And here's something that I want to, as you can see, Qs, yeah, bounced up to a new high, down slightly, 42 cents. Not a great deal. However, if we close today where we're at, we will have a dark cloud, which is a bearish reversal signal on the Qs on the daily chart. We have a spinning top on the weekly chart. Pay attention to this one section here. Let me get up there and let me blow this up a little bit. So, and let me get my pencil. There we go. As you can see, the Qs have been basically finding support right here just above the 180 level and then running $2 or $3 up. This is on a weekly chart. So for your planning going into next week, look for a retreat back into this area. It also coincides with the 8-period weekly moving average, which is slightly above the 50-day moving average, but if pulling back into there, that would be a perfect place to trigger to potentially go long. Now, it still needs to hammer its way through and break through these 185 and up here at 187 level to push on up. But that's something we can look forward to. If it doesn't do that, we simply just get out of the trade, exit it, and move on. But that's something to be looking for. Again, it has done that. It has pulled back to that 8-period moving average. 1, 2, 3 weeks in a row. 3 weeks in a row. So one of the things that we can do is just kind of park an order down there. And if it does go back down there to next week, let's say we just park an order about 180, 194. Or let's say you want to trade the, I may put this out as the bonus trade for next week. The TQQ, again, balance it out here at about 166, 167 level. And then if we do break out, that would be a really nice move on up over 175, even to get back up to the existing past highs would be a move of about, looks like about 8%, 8%. So that would be in a very short period of time. And its daily move, and this is something to be aware of, and I hope this is helping, its daily move, its weekly range, it's about 7%. So, factor that into how you want to put your strategy together to trade. Because, if you could take 7% out of the market on a regular basis, like on a weekly basis, might be something you might want to look at, especially if you have a smaller account that you're trying to build up. Because if you compound it at 5% per week for, let's say, 3 months to 6 months, even with a small amount of funds, it will grow into a larger trading account very quickly. But again, it is respecting the heck out of that line, so that's an excellent way to approach that. Lastly, let's take a look at IWM. Now, IWM is my personal favorite entity to trade into the new year. What similarities do we see with IWM and the Qs? Well, similar type thing here. Let's blow this up a little bit. Blow this up a little bit. Where is it retreating to? Right there, and it has done this 3 weeks in a row. It has retreated back to about 169.83 and then rebounded up. We've got a slight, very slight downtrend here with a couple of hammers. This is not a long downtrend, so you don't expect the reaction to be that much going up, back up. But if we rebound from the 8 on a weekly basis, this is on the non-leveraged, back up to the past highs, you're talking about about a 2.5 to 2.5% move. So if you're an option trader, you can look at saying, okay, I'm going to put a trade on because my range here is $2.75. I am going to put a trade on if I hit the 8 period moving average, 8 week moving average. If price action hits that, I want to buy. I want to buy either an at or a slightly in the money call with probably a delta of about 50. I want to go at about 4 to 6 to 8 weeks in anticipation, or maybe even longer. Maybe I want to take it out to January. That way I will be positioned for the potential year-end run that tends to happen in IWM. Matter of fact, that's a great idea. Go out to January January to take a position. Or what else can we do? Well, we can also look at, I want to show one thing here really quick. Based on this move from here to here, oftentimes what we see is, I'm going to throw in a fib on this, just a fib extension, and I think I want to go from here. I want to go from here. Oh, come on. Nope, I'm going to go the other way. And if you're wondering about where things may go, take your fib from here back down to your swing low. And what this will do for you, it'll show you some extension line. Dadgummit. Get that. Edit. Whoops. Activate. There we go. Put it back to approximately that low. There we go. Now, where's it likely to go? Well, oftentimes on these moves, the optimal target is somewhere between a 1618 extension or a 1236 extension. So that would be up here at the 1236 extension would be up at 175.59. How far would that be from that zero or the 8 week moving average? Well, that would be about $5.73. So again, for you option traders, some really good possibilities there. Other potential for the option traders, you could definitely look to throw out a credit spread or even a debit spread with the call to kind of cover the top of it. Because especially if we expect it not to go any much higher than 179, you could sell above that out in the January timeframe, and it'll reduce your cost just a little bit without impacting how much you could potentially gain from that. The TNA. Similar thing here. Where's TNA? TNA continues to fall back to about the $90 level, or the 8 period moving average. And if we move all the way back up to the top, and I know it's hard to see it, which is about there. As you can see, that's about a 7% gain. And so in a weekly basis, and from there to there, just on a weekly, it moves about 5%. So just like I said, start ratcheting in, going, okay, if this moves 5%, if I can capture, part of that either directly with TNA, again, and then work on compounding that, it's a great way to grow your account. Great way to grow your account. So let's see. Excuse me. Okay, I want to throw out here a couple of stocks, and then we're going to basically wrap this up. Tesla is moving with the same insanity that the owner and CEO is moving, and I don't let's face it, Elon Musk is brilliant, but also oftentimes with brilliance goes a little bit of craziness, and he definitely shows that. What are we looking at Tesla? Okay, Tesla's running into issues when it gets up close to the 50-day moving average. The yellow dot right there, or the gold dot right there, is the 34. So it's hammered its head against the 34 a couple of times, but it stopped. We've got the 8 and the 20 kind of reversing position. So right now, Tesla could go either direction. I expected this sell-off that happened on Tuesday to extend all the way back down here for it to take out these past lows. Didn't happen. But I also like the resistance that's up there at about 310. So I'll be paying attention to 310 to trade Tesla to the downside. If I rebound, or if I pull down to the 280 level, that may work as a higher low on this progression down. That could also provide an upside move. And those of you who really want to BU, there we go, LABU, we were looking to enter this trade. We may have actually entered it on a pullback back into these areas here. And I think my pullback is down here to the 91.50-ish level, where if I'm bouncing off the 200-day moving average again, I want to take advantage of that with a stop just immediately below these levels, about a 3% stop loss on that. What am I looking to take advantage of? I'm looking to take advantage of this zigzag in a range-bound movement on the biotechs, and we'll see what transpires. As you can see, on a weekly basis, it's pulled down to that 90.50, 90.48 level and bounce from there. And so we can, you look at the chart, you say, hey, here's where it's bounced previously. And if it is moving in a sideways basis, when it approaches that level of a support floor, that's when it should bounce again. And if it doesn't bounce there again, you just basically fire it, because you're really close to your stop loss, and it limits your risk dramatically. So, okay, let's move on just really quickly. Here's where we're sitting on the active trend trading this far for the year. Also, for premium members, I do put out this weekly, if you're not a premium member, active trend trading is going to have some really cool stuff coming down the road in October, November, December. And one of them we will continue on is where we provide this go, no-go table every week to let you know, okay, here's where I'm looking at getting into things. That way, if I miss an alert or I miss sending something out, you can plan your own strategy for getting into these trades. And here's the levels you can look at trading them. Waiting for setups, but we've got Tesla, BABA, Strategy 1, Magnificent 7, leverage ETFs, waiting for strategy 3. And then one of the things I just want to mention, okay, we do have this, we're making some announcements on this coming down in October. If you're a premium active trend trading member and also a member of the early warning alerts, you'll be getting a special email in the next couple of weeks that will offer what we have. Market action points is the replacement for that. It's going to go into place in October. One of the things that I was somewhat frustrated about early warning alerts with is that it was the limitations of early warning alerts. They provided great reversal signals on the indexes. However, there was more whipsaw than I like to see. And then secondly, there was a limitation on the number of trades. There's a pretty significant limitation on the number of trades that we would like to see every year. Like in last year, 2017, we only had one trigger. And And what we've done is myself and Brandon have gone back and redone the back testing that had been done with one of the previous members of the early warning alerts team. And we found that there were several, what we'll call minor action points, that we could have got into successful trades and also held onto them for longer than just the 20 to 21 days that was previously back tested. So again, it gets back to, we're trying to clarify, simplify, and multiply. What this chart represents is on the back testing, we averaged return was about 30%, 28 to 30% per year. And just to give you a flavor for if you were trading an IRA or whatever and just doing just the basic system, the purple down here is the S&P cumulative returns over from 2002 to 2017. The green, and this shows the power of compounding at, rather than 8 to 9% that the S&P does, at about 28 to 30% shows you the power of compounding. What I'm looking at is I've got 3 grandchildren I'm trying to build a college fund up for. I'm going to be using this system to and this service to build that up. So looking forward to our seasonality. I'm not going to go into the seasonality each of these other than to say, hey, we're approaching October. Seasonality tends to tick in for the Russell, the S&P, and the Qs. Seasonality tends to kick in toward the end of October for gold. And as we all know, gold, July, August seasonality was basically a nothing sandwich. So we're looking here. So webinars, we've got, I do have a call-in webinar for the Bay Area Moneymakers tomorrow, September 22nd. And then, of course, our continued premium training that we do for premium members every Wednesday at 6:30. So with that, I just want to say, hey, thank you guys. What are the instruments the map is using? Well, Mr. Ping, yeah, Steve, I'll take a look at JNUG. Basically, the triggers and all that kind of stuff is all basically proprietary, where we are providing the trigger. It is a timing service. It's here's where we are getting into this. We've been very accurate. It takes the major action point triggers that we use for the early warning alerts, improves them, and that service identified every major market turning bottom going back to 2002. And then what I'll do is we'll provide both. Here's the alert. Here's the trigger. Here's where we're going to get in. Be primarily just trading TNA. We're not going to try to mix it up across all the 3 indexes. And so more information will be coming out on that first 2 weeks in October. If you're a premium member, stand by for in about a half hour. We will be doing the final hour. So until next week, I just want to say aloha, God bless everybody, and I will take a look at those stocks. So Steve, don't go away. Have a great weekend. Aloha, trade well, and prosper. And let's take a real quick look at, and I want to take a look at, okay, JNUG. Yeah, gold. As you can see, isn't it interesting, Steve? Okay, here's the JNUG. Shoots up here, does a nice little move up. Off of a positive divergence. This is Murphy's Law for the market. I was traveling when all this stuff was going on, where we're getting the reversal signals and all that kind of stuff, because this is one heck of a move. But again, I still reviewed my weekly review. We had 33% move. So what we can do here is TSI looks like it's trying to turn back down. However, TSI on the weekly chart looks very powerful. So we can take a look at any kind of a pullback into about the $7.50. And I would put a stop below the $7 level. And that would be a stop loss of, about 6-7%. So I wouldn't want to do a full position that far away from my stops, but it may hold right here. I could also tighten this up here. We now have a new daily low. If that turns out to be a small body, if I drop down here, I can take a trade in JNUG, pushing back up through that body. Or let's say I get down, I really like the 760 level, and just keeping a stop loss very close to that. So does that help? Oh yeah, I'm sorry, Mr. Peng. Yeah, it'll be strictly index leveraged ETFs. And the other thing with the market action points that I like is there will be an occasionally trade to the downside at the right moments, but we'll use the inverse ETFs for that. And so, as I said, the number of trades we did in January in 2017, we did one. When we've gone back and re-looked at the data, there would have been the one major action point, which led to about a 30% gain, but add to that about somewhere between 2 to 3 minor action points that actually had bigger, more gains. And so, like I said, I'm really quite pleased with what's coming downstream for market action points, or an acronym, of course, an old Navy guy, I have to have acronyms. MAPS is what it's going to be called. So, okay, my friends, if you're a premium member, we'll see you in about a half an hour. If not, make it an absolutely fantastic weekend. God bless everybody. Aloha.